tax that's expected tax. So when you change the laws, there'll be taxpayer responses. What's different this time around is the potential responses by governments in terms of some of the actions, and some of that has been in the news with California and New York. So what I've listed here are some of the usual disconnect provisions, some of the things that come to mind that get talked about when the reconnect issue comes up and the feds change the laws. So the big one that kind of tops the list is the pass-through entity deduction. And that's for a couple reasons, because of the uncertainty at the federal level, as well as Oregon having its own policy. So now we have two policies that are kind of getting at the same thing. They're not identical. The Oregon policy focuses on active income, whereas the federal policy just doesn't make a distinction between passive and non-passive income. And so that's why it makes the list for potential review. And then we have bonus depreciation in Section 179. Those are some of the common ones that get discussed. And then the second bullet point, the changing funding sources, this is what gets talked about given that the income tax deduction has been capped at the federal level and somehow changing the nature of income tax payments. So the income tax deduction has been limited, but the charitable contribution has not been limited. So if the income tax payments can be considered charitable contributions, so if there's some tax credit or a donation to an entity that is set up, or perhaps a donation to the state school fund for a tax credit, some way of changing those kind of payments from being characterized in the IRS's eyes from a state income tax to a charitable contribution. And then there's also, some folks have talked about a payroll tax, where if you shift the income tax to a payroll tax, you can hold individuals and employees harmless by shifting to the payroll tax, which are fully deductible by businesses. That's probably a little bit more complicated because you're talking about involving employers, different groups of stakeholders, as well as a payroll tax for the most part is a kind of flat tax on wages one and up. It doesn't have to be, but that's how they usually are. Whereas our system, the income tax system, is a graduated system. I mean, we get to the 9% pretty early. But also within our system, about 70% of the income that is taxed in the personal income tax system is wage and salary. There's 30% that is not.
Yeah, absolutely.
Thank you, Mr. Chair. So, Chris, these two things are something I'm actually getting a fair number of email traffic about from my constituents. And I don't really know how to answer them about whether this is just sort of a interesting idea that's not really realistic, or maybe there's some there, but we can't do it in a short session with 20 days to analyze it. So as you guys look at this, if you have something I can say back to voters who are, reading about it, it would be helpful. As I'm not a tax expert yet on this part.
Well, let me make a comment on the change funding sources issue. Note that assuming you wrote the bill correctly, either of these recharacterizations would have no effect on state income, assuming the bill is written correctly. But they would have an effect on the deductibility of the payments made to the taxpayer, and therefore that would reduce federal taxes. Right. It doesn't affect the state directly, but it does affect high-income taxpayers. When you look at the disconnect from certain provisions, depending upon how that all works, disconnecting could significantly increase state revenue because it would do away with pass-through entity deduction or bonus depreciation or Section 179 expensing, or change the nature of the bonus. I would dispute the argument that you can't do it in a short session, because I think all these concepts, except perhaps the payroll tax issue, which I think gets pretty complicated pretty fast, I think all the others could be managed with a relatively small bill in terms of drafting. It's just a question of whether you want to do it or not.
Well, and that's the part I'm trying to get some guidance on, like,
Yeah.
these people are writing to me saying,
Well,
you ought to look into this.
Chris isn't going to tell you whether we
And
should
I'm-
do it or not. That's up to us.
Well, okay, but part of what they do is they say, well, this is viable, it's legal, we could do it, here would be the impact, versus, no, the IRS or somebody in the federal government might say, we think you're just scheming us and you're not
Right.
allowed to do it, and, that's the sort of thing I'm looking for, so I can give an intelligent answer
Well,
to constituents.
There
who
isn't any
ask me.
question that we can disconnect from those three things
Right,
at
but
the
they're not
top.
asking me about those, they're asking me about the change funding sources.
Right, and the risk there is that the IRS is going to look at a charitable contribution, which they take a tax credit in Oregon for, and say, no, that really is a tax payment, and we'll consider it that way for purposes. Now, the fact is, we have no idea how they actually would behave, and we know that some big states with a lot more resources